Ladies and gentlemen, hello, this is Christopher Aaron. Welcome back. I am glad to be back here with you. This is October 3rd, 2018. I've been gone for a few weeks, doing some additional research, taking a break, and it's good to be back. What we do here is we look at the observable trends in the precious metals market. We look at the best way to analyze these markets, which is observable data and observable trends. We do not rely on stories or hyperbole that you may hear in some other channels. That is what we do here. We do focus on the precious metals because I do believe there is something special about the precious metals. It's just that we have to be careful because the market can act irrational and there can be other things going on over the short run that we really need to pay attention to. So that's what we do here. A couple orders of business. First, I did want to tell you that there is a special offer that I'm opening up only for you, only for the YouTube viewers. And that is a 2 weeks trial to the premium subscription for $1 only. Now, I actually would have made this completely free for 2 weeks. I wanted to. It's just the credit card company denied the request. They won't let you charge nothing to sign people up. So in order to get people's data and get them into the database, you actually have to charge something, like a nominal amount. So I set that at $1. The normal rate is $59 a month, but it's $1 for 2 weeks. So this can give you a chance to really dive in and see what we're doing over there, see some of the more in-depth analysis that we highlight here, and get ready for what should be setting up in the precious metals over the next year and a half. There's going to be more details about that at the end of the broadcast. I just wanted to let you know ahead of time. Let's look at the prices of gold and silver for the last 2 days. And by the way, if my voice sounds a little bit different, it's because I've got a little cold here. I've actually been taking some time off and doing some resting. I've been doing some fasting. Has anyone ever done any fasting? I've been doing it for health purposes, to try to clean out the system a little bit. I felt pretty good, but it's leaving me with a little bit of a cold feeling. So anyway, that's why my voice sounds a little bit hoarse right now. We look at the short-term price action for gold and silver, and we're looking at the spot price. Always the spot prices of the metals here. First for gold. Of course, you know the difference between the spot prices and the prices that you're going to pay for coins or bars or rounds or even a storage program. There's always going to be a 2, 3, 4, 5% difference. And why? It's the same difference as why you pay more for a finished table than for the price of the raw lumber itself. You can trade lumber, by the way, futures contracts, but it's the difference between the finished product and the bulk product. So we look at the bulk product here, and we're looking at gold hovering around that $1,200 mark. It looks like it's getting ready to finally make this advance that we've been looking at. We'll put that into better perspective. Not much to see here on the 3-day chart. Looking at silver, was there any outperformance from silver over the last 3 days? No. We can see that all the relative highs and relative closes match up pretty well here. Although there was that outperformance day on Friday, which was pretty notable. Nice surge by silver with basically no move at all in gold. So we're looking at that from the standpoint of the gold to silver ratio, something that's critically important for you to follow, especially over the next 6 to 9 months, because there's this window. There's this window in the gold to silver ratio where if it breaks lower before a defined level that I'm watching, around 77 on the gold to silver ratio, it should signal the next major leg of the bull market. But if it fails to do that, I think this market's going to take a pretty radical detour with lower prices than many people can expect. So I'm not showing that right here because we are going to dive into the gold chart, but that gold to silver ratio analysis you could see in the premium video for this week, which by the way is just like this, but it's an hour and 15 minutes long, and we cover many more facets of the precious metals market. You can see that entire discussion just for that $1 nominal sign-up fee. Turning to the gold market, looking at the observable trends, and once again, if you're new to this system, just understand, here's the price. This is the price of gold, always in this red and black. Black for up days, red for down days. We're always looking at the price in the middle of the chart. This is a momentum indicator. We don't use that often, but every once in a while it provides a nice signal. This is a ratio indicator on the bottom. This is gold versus a commodity index average. So we're looking at how much of gold's movement is due to commodity inflows and how much is due to its role as a monetary asset. Okay, but the most important thing here is that we're looking at the price in the middle. And these colors are always color coordinated to try to draw your eyes to the important trends. Okay, so what do we see? For example, in this this turquoise color, this broken 2011 to 2017 downtrend. This started all the way back, way off the chart in 2011, and came all the way back down. And you could see how well these highs matched up. 4 or 5 highs here in 2016. These highs matched very closely. And then we finally had a legitimate break of this downtrend here in July 2017. Now notice that gold, after these surges, even though it's declined, it still has not fallen back below this broken trend. So this is the power of trend analysis, is that it often shows you, it doesn't guarantee that a market is going to skyrocket, to the moon, as a lot of the salesmen like to say. It does not guarantee that. But it is showing you that a market is in the process of changing. It's showing you just that a market is negating a former downtrend and maybe entering a period of more sideways consolidation. So gold's still above that broken downtrend. And what else? We can see that gold is below a rising trend, which began from the absolute low in 2015. Breakdown happening right here just a few months ago. So where does that leave gold? Between two broken trends. So there's a phenomenon that when a trend is broken, as we can see, it tends to act as the opposite type of support or resistance from the original trend. So this line was holding prices downward for several years, and now it's holding prices above it. And in a similar way, we expect that this trend line, which held prices above it for 2.5 years, is now going to hold prices below it. And there are fundamental reasons, of course, why this works. Buyers and sellers are changing places. People that were buying up here are now selling. People that were selling down here are now buying. That leaves, all things considered, a market that is defined by these broken trends. Of course, there's a lot else that we're looking at here. A major resistance zone here in the upper 1300s, and a major support zone here in the 1050 to low 1200 range. So what do we expect? All that said, what is the takeaway at this point in time? There can never be a point in time where we say what every single twist and turn is going to be every second of the day for the rest of eternity. That's absurd. So we have to constantly monitor trends because trends do change. The only way that you can see when something is changing is if you continue to monitor it. What do we expect? Gold is beginning this rally that we've been looking for. We're seeing evidence for that in silver. Gold should rally into the vicinity of this broken trend line here. And I wouldn't be surprised if this broken trend line is the one where people start, when it gets back into this vicinity, I think we start to see a lot of analysts coming out and saying gold's going to 1500, gold's getting ready to blast off, gold's going to the moon. And this is where gold should back off. And gold should make a new low below this low from just a few months ago. And after that, we will discuss. We will follow it. We will monitor a lot of the leading signals, and we will have a good assessment for what gold is going to do when it gets back to this area. Now, zooming things all the way out, big picture. We were just looking at this, and don't things look a heck of a lot different when we show such a different time frame like this? So this is one of my big keys also, is to always be monitoring multiple time frames at the same time. You never want to get so narrow focused that you lose perspective on what's happening in the big picture. Thus, after we see that little bounce that I'm talking about and then a new low come here into the gold, what will we expect? This is what I'd like to ask you to sign up for the $1 trial. The premium video that went out last weekend, as I said, it's about an hour and 15 minutes in length. We dedicate about 15 minutes to this discussion on gold itself, looking at all of the observable trends for the last 18 years and some, and coming up with a pretty good high-level assessment of what should be happening as gold approaches this low. I can't fit it all into the free video, so that's what that is there for. This is the big picture perspective on gold, what should be happening when that next low comes in. Let's switch over to look at silver. Here are the observable trends in silver. The most important takeaway here for silver is that this support zone, shown in black color, was touched on let's count them. Actually, excuse me. 1, 2, 3, 4, 5, 6, and look at these little ones. 7, 8, 9, 10, 11, 12. I count 12 distinct ones. Okay, minus the 24-hour drop below it here on the flash crash, of course. 12 distinct hits, broken legitimately. We're seeing a rally unfold in front of our eyes. The highest probability assessment here is that when an established support zone turns to resistance, because sellers show back up in this region, people who bought on each of these lows here, who are all now underwater, all things expected, are going to sell when the price gets anywhere near this zone again. This is one of the clearest breakdowns that I have seen in a pattern, a descending pattern, over the last 5 years in the silver market. So the highest probability is that silver, once it encounters these sellers showing up again, will make a new low. We have an outstanding target of $12.80, which is based on the amplitude here of the highest swing, subtracted from this breakdown point. This is what we expect in silver as gold is making that next low. Notice it should look like silver is coming down below its 2015 bottom, and gold should hold nominally above its 2015 bottom, showing a relative outperformance in favor of gold here at the early stages of this basing process. Zooming it all the way out, and once again for perspective, we were just looking at this. How insignificant is that over the grand picture of things? It's quite insignificant, of course, except that people become very focused on it over the short run. And there is significant damage that can happen when one is over leveraged in the mining sector or in futures or options. Even a drop from 20 down to 15 is quite significant in percentage terms, even though in the big picture it's almost nothing. And the big question is now, when we look at this rise from $4 an ounce back in the earlier part of the last decade up to 50, is not this the same as what has happened here in the 1970s? From 4 to 50 and all the way back down again. All the way back down to 4. Complete retracement of this, what was a bubble in silver in the 1970s, partially due to the cornering by the Hunt brothers. And the question is not the same thing happening right now? This is what we discuss in the premium update that went out 3 days ago. I do thank you for watching this broadcast. This is a critically important time in the precious metals. I strongly believe that the people that turn their back on the sector altogether will find that they miss the big move when it happens. That is my strong belief. And that's why I will continue to publish these videos, both premium and the free versions. I will continue to do this to the best of my ability. The genesis of this channel was simply that I was disgusted by what I saw in the precious metals community over the last 5 years. The constant calls for silver to go to 100 or 500, the constant calls for gold to go to 2,000, when all of the observable data was pointing in the opposite direction. And I got disgusted. As someone who loves the precious metals, I really got turned off by that. And I said, there's got to be a need for something a little bit more accurate and a little bit more plain to see, a little easier to see actually for the individual investor. So that is the goal of this channel. The premium service that I mentioned covers flash updates that get sent right to your email inbox when we make a trade or when something critical happens. You know about it first. As I said, members-only videos that tend to run about an hour and 10 in length. Updates on physical gold, physical silver, the mining sector, which we did not even get into in this week's broadcast, the US dollar, the stock market, and the bond market, all of which you have to follow these to be a knowledgeable investor in gold and silver themselves, as well as the individual mining companies that we are investing in here. Now that free offer, not free, $1. I literally went into the credit card processor and typed in 0 for the charge to try to allow it to accept new members, and it wouldn't allow it. It said you have to charge a nominal amount. So that's why I'm doing that. The special offer is available only for you here on YouTube. This is only available for the next 3 days. After that, I'm going to close it. I'm going to take it down. This is a trial. I may or may not do it again in the future. So please take advantage of it now and just see. It's literally designed so that you can plan ahead and know what to expect for gold, silver, and the mining sector and all these other asset classes, and so that you can see what it's like to have clear technical analysis of the precious metals delivered to your inbox at least once per week. How does it feel to have updated knowledge on what the observable trends are, what's happening in these markets? How does it feel to have that once a week instead of, reading all these contradictory reports about, World War III and Trump, is going to do this and, the COMEX is going to default and that, and week after week after week, we see no evidence in the actual prices themselves. So that's why I'm making this open. By the way, you can cancel that at any time within 2 weeks. And at any time within the 2 weeks after you sign up, and you pay nothing more, absolutely nothing more. All you have to do is hit the cancel button in your PayPal account, or you can email the support team at any time and we'll just cancel it for you. You have to there's a special link in the description below. You have to use that link. Do not try to sign up for this on the homepage itself. There's a special link that will take you to this offer. As I said, this is available for the next 3 days. I also work with individuals. If you would like to speak to me, Christopher Aaron, in person, either by the phone or Skype or by email, I offer this so that I can dedicate time to individuals who have questions about the workings of the precious metals or about their own situation. Thank you very much for tuning in. It's nice to be back. I'm glad to have you back. We do have, the takeaway here is that we do have a rally that is setting up immediately in gold and silver. However, lower prices should be coming in the early part of 2019. And at that point, there could be a major, major positive signal setting up. Let us follow this market very closely.